Welcome everyone. My name is Henrik Hintze and I'm an equity research analyst here at ABG. With me now I have Fredrik Berghel, CEO of Inission, a company that I cover. Welcome.
Thank you, Henrik.
Let's dive straight into it.
Yes.
A couple of years ago now you acquired your first stake in your subsidiary Enedo. Which has been a topic over the past years, and I was just wondering if you could give us a bit of an update on what has been done to turn Enedo around, where you are now, what remains to be done, and what challenges you're currently working on there.
Absolutely. As you said, we acquired AXXE spring 21. We put ourselves in the board May 21, which changed the board, we changed some management, the top management. And then phase one was a restructuring program, really adapting cost to income, and mainly in Italy. Italy were severely overstaffed comparing to the amount of revenue and the profit they brought in. So that was the main thing. But then also one have to remember that Enedo haven't earned money in a long time. So they were undermanaged, underinvested, and they had a financial situation also with quite a lot of loans, with high interest rates that were dragging down the company. But after that phase, where we are now and been a little bit over a year, I would even say, now we have a break-even situation. 22, we earned some money, 23, and now we are on an improvement journey. We call it initification, step by step. Investing in better machines, investing in better processes, tidying the company, getting more and more like a normal company, I would say. We also have to remember that we entered in a phase there where everything was booming and there was shortage of components. And Enedo suffered from that, as well as a lot of the electronic industry. And of course, that created for a company in problem, that creates even worse problem. If you don't pay your bills, you don't get deliveries accordingly. They had really poor performance to the customer. They had to prioritize really hard from the output of Tunisia and so forth. So it was a severe situation. But now we are on top of that. But now, on the other hand, revenues are falling.
Exactly. So how would you say that this
now when we have cleaned the house and are ready to deliver and improve, we have an improvement scale on OTD, for example. Now customers are postponing orders, delaying orders, and we are not running at full speed anymore. And the drop now in sales here. Q2 compared to last year Q2, that was 20%, almost 30 million. Yeah. And of course that had brought down what I refer to as the NAV, net added value, revenue minus direct material. And cost level almost the same. So now we have a decreased profitability in Enedo Q2. But I think remembering from where we are coming from, I think they are doing okay anyhow. Yeah. I would say, yeah.
So basically, the challenge of getting Enedo up to the Inission margins now would be mostly a matter of slightly improved demand environment, but also small incremental improvements, not anything bigger.
And also investing now in the product program, in the product portfolio. One have to remember that Enedo is a product company, and they hadn't bought proper machines in many years, and they haven't invested in the product program either in many years. And that goes also for marketing and the sales organization. There are a lot of things now that can be done step by step better. But an important thing that we are doing now to focus over Enedo to be a pure product company, that is to move the factory. The factory in Tunisia would be shifted over to Inission EMS. Inission EMS, they are professional manufacturer. Enedo, by all means, they are not professional manufacturers. So we think having the Enedo organization focusing on product, sales and marketing, that will be beneficial. and also moving the factory to Inission EMS, that will meaning that the Inission EMS will have broader offering to their customer. We will be able to offer our big customer today when the volumes goes up. We don't have that low cost offering in our product portfolio today, Inission EMS. So that will be what we hope, a win-win, but it's a long journey. And we are now investing in IT infrastructure, and we are also investing in upgrading software and so forth to make this possible, you know. And that's where we are now. And we think we can do Q1, Q2. We can hand over, Enedo can hand over the factory, Tunis factory, to Inission EMS. And we think that will be very good, helpful for both sides of the company. Yeah.
Yeah, all right. So turning our attention to Inission a bit then, over the past years, you know, between 2021 and 2023, profitability increased quite a bit in Inission from slightly above 5% to 8% EBITDA margin. At the same time, you grew a lot over that period, maybe 50% organically or something like that. So I'm just wondering, was this margin increase mostly a function of this growth and increased capacity utilization, or were there also other factors that drove improved profitability?
I want to think, of course, that it's both. Of course, we were helped by organic growth. But as I just said earlier, we also had these struggles with the component overloading. So we were not that lucky with the loading as we would have been in a normal component situation. Then we would have been able to earn even better money. So we sort of reached this 8, as you are saying. And Inission EMS is hanging in there almost 8, 7 point, very close to 8. So even this year, and now volumes is going down, top line is going down. NAV Q2 is AXE adjusted, almost the same, meaning that the cost increase we have now is actually bringing down Q2 year on year, a couple of millions, 3-4 millions. We are below last year. But the total drop is 12 million. So 8 of those is coming from the lower sales that I just explained in Enedo. So 8 of those 12 lower EBITDA in Q2 year on year belongs to Enedo then. But we had worked towards larger organizations. We have centralized better some functions, sales, procurement. We have also invested in our processes and also invested quite a bit in our machines. So we are a stronger and better company, step by step, also on the Inission EMS side, I would say. Yes.
Okay, so zooming in a bit on current affairs now then. Over the past year or so, demand has been softer than it was in previous years. But since Q4, your book-to-bill has improved quite a bit, I would also say. So could you just describe how the demand situation has been over the past year and how it has changed and what you think is going on right now?
Yeah, absolutely. As just said, we had tremendous years, 22, 23, and the economy was strong and our customer used up a lot of those products. But due to the fact with the lead times and so forth, they also overbooked. So they bought too much Inission EMS customer, but also Enedo customers. So they have still, unfortunately, too much on the shelves. So they are still destocking some of that. And in addition to the destocking, and this is of course not all customer because we still have customer that is buying and shipping directly. But as a total, the destocking together with a slower pace at our customer's customer, meaning now that we are running on a lower speed now, absolutely. And from Q4 last year, we had a really low booking, book-to-bill ratio really low. And now we have improved step by step from that. Still, I was disappointed on the bookings Q2. I thought they will come in better, even better. And now, of course, we have the hopes that it will start to be book-to-bill ratio close to 1, at least end of Q3. But we really hope for that for Q4. That is our base scenario, that bookings will be back so that we are flattening out at this level. But that is our base scenario. But of course, we are prepared to break even more because we are holding back now. We are employees that have time-limited contracts. We don't prolong them, and if we have chances that we are cutting back on cost step by step.
Yeah. So let's move on to costs then a bit. You have a full year margin target of 7% EBITDA, and your H1 margin was around 7%, but the Q2 margin was lower at around 5% almost. So just dig into a bit more what you're doing now in H2 to make sure you reach the full year target of 7%.
Yeah, I think really the business units now in Inission, they are big enough. So there are really no excuse for our company managers to say, hey, I have a 370 million annual worth company here and I must be bigger, otherwise I can't earn money. There is nothing like that. So if we constantly now will be on a lower level, it will be just step by step, taking down costs so that they earn the money that we target for, 8-9% EBITDA. And that will happen. But then, of course, also that there is a balance act. We have invested in new machines. I mean, also one have to remember, 1.5 years ago, I had my Inission EMS company managers at the conference in Tallinn. And the big question in May 23, how fast can we buy machines? How will we be able to recruit people to meet the demand curve that look like that? And now, there is a breaking both mentally and also lead time, actually canceling contracts, shrinking the organization. But some of my company managers, they are still in the mood that demand will come back. So don't throw out the baby with the wash water here now. Be careful, Fredrik. So we have that internal debates. So so I think that there have to be a balance act here, so that we don't just slash cost because of it. We should do it step by step, shrink, and we are definitely a type of company that should be able to earn the money that we have targeted for in due course. If that will be Q3 normally is a vacation period for a lot of our companies.
Yeah.
So that is normally a weak company, even though I remember last year we had a really strong Q3. But then we will get back on track there. That is because I think we have staffed and equipped this company and also the mental things here. And also, again, that was not in your question, but we have a trend here now. Digitalization, robotization, automation, electrification, nearshoring. There we are in a good industry. So we really for sure think that demand will come back. And we should be prepared for that with our new machines, our new facilities. But it's a balance act, yes.
Yeah. All right. So finally, you also announced in the Q2 report some exciting changes to your debt structure and how you handle that. Could you just briefly explain what you did there and how that will benefit you or affect you otherwise going forward?
I think thanks to our financial situation, our balance sheet at that time, early this year, we started a financial service procurement, bank procurement, if you so want. So we have our main bank, and we just asked for quotes from that bank and 3 other banks. And I think now we are a company of a size enough, profitability of enough, and we have enough strong balance sheet. So the banks, the main banks in Sweden, they are interested to do business with us. So from negotiation point of view, we had a good position. So we have managed now, due to these quotes, been able to lower down the margin that we pay, but we have also changed the structure of our financing. Instead of having, we had one share of actually invoice selling, which is a hassle in many ways, and we also had a structure with factoring program, meaning that we are lending on our invoices. So all of that is cancelled now. So we have a clear working capital facility. And then we have a leasing facility, and we have a frame for if we want to move to acquire companies. So we have these 3 base loans that we're working now. So it will be lower cost. It will also be less administration at our daughter companies working with these selling invoices and factoring programs. So that will be beneficial. And then also in this process, we have managed to refinance quite a bit of strange loans that Enedo were sitting with, expensive loans. So now we are financed as a medium-sized, well-functioning company. So I think we have good deal with our bank there, and also seeing already Q2 numbers, we are on 7-ish in interest cost compared to about 10. So we are 3 lower, and 3 times 4, yeah, we should be able to lower our run rate here now on financials for 10, 12, 13 millions. So that is our ambition, yes.
Yeah, very good. Thank you for this, Fredrik. That's all we have time for.
Thank you, Henrik.